So, Danny, I got a kind of a cool story I want to share with you. A feel good story.
Okay. All right.
If you will.
That's a nice change of pace.
Yeah. My one of my credit card companies called me. Really nice person. They called me up and they said, they told me, Chris, you have an outstanding credit card balance, and it just made me feel really good about myself. It's outstanding.
Yep.
Yeah.
It's outstanding. How much outstanding is it?
What do you mean? Doesn't it mean it's like outstanding, like really nice? It's awesome?
Yeah.
Am I not understanding this correctly, or what's going on?
I think you owe a lot of money, dude.
I don't have anything to worry about. I'm probably fine. I'm just going to shove that under the rug. Anyway, welcome back, everyone, to the Financial Philosophers Podcast. Hopefully, none of you have outstanding credit card balances. And if you do, that's okay. No judgment. We're here to talk about credit cards today and want to give you some good food for thought, things to think about when approaching the topic of credit cards, what risks to be aware of, both monetary and psychological too, because there's a big behavioral element here we're going to discuss about today. And we want to take this a little bit deeper than just boilerplate language you hear about credit cards. We want to have an honest and candid conversation about credit cards. So we'll jump right in. Danny, you and I have talked about this before, but most people may not actually be aware of just how profound credit cards are and the impact they have on their finances.
That's very true.
Right.
I have a quick comment or a quick kind of maybe history lesson, and you can debate this with me if you think it's accurate. But there are a lot of studies that show for middle income and lower income earners, real wages haven't increased since approximately the 70s, right? Real wages versus inflation and productivity increase haven't increased for the middle class and lower since the 70s. And that credit cards were used to pick up that difference across the past decades.
Wow. Okay. Let me make sure I'm understanding this correctly, because that sounds pretty profound. So, of course, people's wages have probably gone up in terms of
the dollar amounts,
values, the dollar amounts, right? But what you're saying is on an inflation adjusted basis.
Yes,
they have not actually
inflation adjusted and accounting for the 250% increase in productivity per worker since the 70s.
Wow. Okay. And you're saying because they have not kept up on an inflation adjusted basis, how have people made up for that difference? They've done so by moving
to credit cards
debt.
Yes. And that was one of the primary factors that led to the explosion of the credit card market.
You've probably done more research on that than I have, but from at face value, what you're saying, a lot of it seemed to check out for me, because I remember reading a couple articles recently and seeing some headlines that credit card debt in the country had hit like new record highs. And I forget the number I saw, but whatever the number was, my jaw dropped when I read it. I could not believe how large the number was in terms of total credit card debt we have in this country. It's pretty eye-opening. So, hey, on the back of your comment you just made there, maybe this only further emphasizes the need to jump in and talk about this.
Absolutely.
Topic.
Yeah, these are very impactful and important to discuss.
Yeah. So to our listeners, I would bet money the vast majority of you have a credit card. I don't know what the statistic is, but I wouldn't be surprised if it was 70, 80, 90% of all people in the country have credit cards. I'm not really sure. But I think it's ubiquitous in households. Most people have credit cards. It's just kind of become a staple method for making purchases, right? And there's a lot to unpack about credit cards. I think the biggest elephant in the room, which we hammer down a bit in a couple prior episodes, but credit card interest rates, right? So it's worth talking about that on its own for a second. Most credit cards, I did look this up on Google. It said the average interest rate on credit cards is something like 24%, I want to say.
Yeah,
I think it's safe.
They're almost like loan shark level interest rates, right?
Yeah.
You don't see those rates anywhere else in any financial market.
No. I mean, I think we, obviously I did a quick Google search. It's not like I did a deep dive analysis, but I think it's safe to say that most credit cards have an interest rate north of 20%. I know all of mine do when I've looked up the APRs.
And this is in an environment where the base interest rate was nearly zero, right? The credit cards were still running 20% and over.
Yeah, and I think they have ticked up a bit with the rising rates too. But going back to episode 5, what we just talked about recently with whether you could consider paying off debt as an asset class. If you plug this credit card interest rate into the equation, I think we can nip this in the bud right away and say there's no other asset class that's going to give you a guaranteed return on investment like paying off your credit cards and avoiding that double-digit interest rate. It's just massive.
If you find that magical golden goose asset class that is giving those returns, stick with it and tell nobody.
Yeah, or maybe tell us.
Yeah,
because I would
reach
love
out
to know
and tell
about
us. That is not an invitation to contact us with scams, please.
Yeah, it's the best double-digit quote unquote guaranteed return on an investment you'll ever make is just paying off your credit card debts and not paying 20+% interest.
And again,
it's the interest you otherwise avoid.
Paying off debt is that only guaranteed, I'm using air quotes, guaranteed return that you can see in any market. Right, nothing else is guaranteed. Right. I guess except death and taxes.
And so, I would say I don't like rules of thumb. A lot of people follow a certain rule of thumb that they like. I understand they're meant for. Rule of thumb is often created to appeal to a broad group of people, but I'm pretty comfortable with this rule of thumb, and that is, unless you have a unique circumstance, like you might have a certain exception, there might be certain circumstances that warrant doing otherwise. I would argue for most people, you should not be doing anything related to investing or thinking about throwing money in the stock market or anything of that nature until you take care of that credit card debt. Assuming you're,
Absolutely.
I'm not talking about people who pay off their balances every month. I'm talking about people who are carrying a balance and they're being hit with this big double-digit interest. Pay that off. And I would give a call to action to all of our listeners. I live by this, and that is commit to a financial plan in which you never again pay credit card interest. I think if you could always make that true, then you can put that behind you and you won't feel the regret of making other financial decisions when you could have avoided that large interest rate. I think that's a very safe
Definitely.
piece of advice.
Chris, I have a confession. In relation to this.
Uh-oh.
So for a long time, my wife and I, we have 2 credit cards and we pay them off every month. And we have 2 in order to keep utilization on each card as low as possible. And we just split expenses between the 2. To be honest, we pay everything with credit cards and then pay that off every month. The only thing coming out of our bank account, our checking account, is our mortgage, essentially. And she has always paid one card and I pay the other. A couple, like 2-3 months ago, this is recent, 2 or 3 months ago, I hopped in and I was reviewing both cards and I happened to make a payment on both cards. And because of a breakdown in communication or a miscommunication, misunderstanding, she believed that from then on I would be paying both cards. I didn't even think about it, right? Until I find out, for the first time in my life, I was hit with interest on a credit card. So that hurt. I was like, I had never had to pay interest before, and for the first time ever, I was charged interest because I let an amount roll over. So
is that because you thought the miscommunication was that you thought your wife
would be paying it that month? Yep.
Got it. But she thought that you were going to continue doing it because you jumped in.
Yeah.
Oh my gosh.
And it's nothing.
Yeah.
It's no big deal. It's literally just logging in and clicking pay, right?
Yeah.
So now I have a recurring calendar event where every month at a specific date I'm jumping in, I'm reviewing all charges and then paying them both.
Yeah. Hey, it's okay. You don't have to feel guilt about that, and neither do any of our listeners. I've also paid double-digit interest on credit cards before. I, it happens. And I think fortunately it wasn't a lot. I had a relatively small balance. I had paid a little over the minimum balance, the minimum payment due one time, but not the full statement balance, right? And um, there was still a remaining statement balance for the previous month, and for whatever reason, I just forgot to go in and make the rest of the payment, and I got hit with that interest
Yep.
on.
Life is hectic and busy, and it's easy to forget.
Yeah, and so even the most prudent people, and I'm not saying I'm one of the most prudent people, but even the most prudent
people I know.
No. I really want our listeners to know that we are just as human and fallible as they are, because we really are. We learn from a lot of the wisdom we've acquired, and the things that we talk about are from personal mistakes. So, but even the most prudent approach to your finances, this is still a risk, right? So you could argue that simply having a credit card, there is an inherent risk that you may forget to pay the full statement balance one month, even though you had the money available to do so, and you might be hit with a little interest. So anyway, I again, reiterating that call of action, inviting everybody to commit to a plan where you never pay credit card interest again. I think that's a solid plan to stick
Absolutely.
to.
And I think we've gone off the rails a little bit in these personal anecdotes. What do you actually think about credit cards, right? What are the pros and cons?
Well, some of the pros would be, and we're going to talk about this in just a little bit, points and rewards, which is a double-edged sword. We're going to get into that. Another one is that there's a little bit better protection with credit cards.
I agree with that for sure.
So if somebody steals your credit card and makes purchases on it, you have a little bit more at your disposal to protect yourself and like make a claim with your credit card company to protect you against that. It wouldn't be the same level of protection necessarily with a debit card, for example.
I have personal experience with that. I can attest that getting the money back in your bank account is far more difficult and time consuming, and it tends to hit at the worst possible times in life.
Yeah. And the other advantage to a credit card is, most people's paychecks come in at a very rigid moment. It's like maybe twice a month or every 2 weeks, something along those lines. And if you were entirely stuck to paying only out of your bank account, maybe you don't have enough money in there during some awkward window of timing where you needed to make some type of purchase. A credit card, gives you access to somebody else's capital, if you will, to make that purchase.
That's fair.
And then, maybe you don't have to wait until your next paycheck comes in. And under responsible conditions, I could see that being genuinely beneficial and meaningful to somebody's life.
Absolutely.
Not to confuse that with like, I really want to buy this awesome collectible or luxury item that I want so bad. I'm talking like, this is something you really needed to purchase. An expense came up. That could be a benefit.
There's a balance to be found there. My rule for myself is that we don't put anything on a credit card if we don't have the cash in the account to cover it. Right. We won't purchase it if there's a chance that a balance could roll over to the next month and then we owe interest on it.
You're right. I mean, if you boil this down, fundamentally speaking, all a credit card is nothing more than spending someone else's money, right? That's literally what it is. You're spending somebody else's money. And if you don't have the money to cover that, well, then it's even worse. You're actually spending money you don't have.
Correct.
Right.
Yep.
So,
and it's going to cost you more in the long term.
Absolutely. So, yeah, those are some of the pros and cons. I think we'll probably get into a few of them, especially when we get into some of the points and rewards systems. I want to go into that. Before we jump there, though, going back to the interest rate, there are other sophisticated ways you could use a credit card where you're not paying double-digit interest, and this is through something called balance transfer offers. The way this works, for our listeners who are not familiar with it, many credit cards will send you offers, either via email, sometimes in the mail, and they'll say, hey, you can transfer a balance to us. Maybe you have a lot of debt on a credit card you're paying double-digit interest on. And they'll say, hey, we'll take that balance. We're going to charge an upfront small little fee of 3 to 5% usually. And then we're going to give you like 12, 15, 18 months or so with 0% interest. So we're going to basically give you like a year to year and a half to pay off this balance at 0% interest. And if you can pay off the whole balance in that time, well, then the only fee you paid was the 3 or 5%, whatever the upfront balance transfer fee was.
Okay, and that can certainly make sense, right? As a very quick and dirty example, if you have $10,000 on a credit card at 25% interest, right? That balance transfer might cost you $500 up front, but if you can get that initial balance transfer fee, that $10,000 will no longer be accruing interest, and you have a much better chance of paying it off in the long term.
Right. I mean, because think of the other spectrum, right? If you just kept that balance at your credit card that was paying 20+% interest, I mean, it would only take 2-3 months before you pay the same amount as the 3 or 5% upfront fee, right? And so you're basically stretching that out. But this tactic is dangerous, and I have personal stories from this too, which I'll get into in a second. For one, yes, it can buy yourself time, but it's so easy to just punt that problem out into the future and say, I'll deal with it later. And what ends up happening for a lot of people is they continue with the same spending rate and lifestyle that they were doing in the first place that got them into credit card debt in the first place. And they think they've solved the problem when they did the balance transfer, when in reality, the problem is not solved until they actually pay that balance transfer off.
Okay,
right?
That's fair. But again, doing some quick math, with a 25% interest rate, I mean, you are looking at over $200 a month in interest on a $10,000 balance. So after just 3 months, you've already exceeded that upfront balance transfer cost. So if you're spending beyond your means, regardless of whether you maintain the current credit card or the balance transfer option, you're going to end up destroying your finances. So I mean, long term, it looks like a balance transfer. That I would do that. I would pay $500 up front in order to get rid of that 25% rate for 18 months. Absolutely.
Yep. It does. You just have to our listeners, you just have to know the risk going in, that if your behaviors don't change and you just punt it off and don't actually deal with it, then you may actually be compounding a much bigger issue later on, which could be really terrifying. So that's something to be aware of. The interesting thing about the balance transfer too, there's kind of a weird conundrum that happens, right? So if you do the balance transfer and you pay the upfront 5% fee, we'll say, right? The sooner you pay that balance transfer off, the bigger return on investment it was to the credit card company. So like that means they not only did they charge you a 5%
phantom return, or do you get hit with fees?
No, you don't get hit with fees. This is going to be a future episode for sure. Talking about returns, like really understanding returns, because it is unbelievably complicated. I promise you, most people underestimate just how complex investment returns are.
Okay, that's fair.
Because it's not just a nominal return. There's not just a dollar amount or a percentage. There's also a time factor.
Time value of money,
so,
risk-adjusted returns. Yep.
And it gets really counterintuitive. Like, so like, if a credit card company gives you takes $10,000 of your balance transfer and you pay a $500 5% upfront fee for it, then you turn around and pay that whole thing off. The credit card company did not make a 5% return on investment. They probably made a huge double-digit return on investment because they got that 5% just in a period of maybe a couple months if you paid it off really fast, rather than making them wait an entire year plus to get that $500
would
back.
Your argument then be that it makes more sense to pay, if you have $10,000, you pay $500 up front to get it on that 0%, that balance transfer card for 0%, and you pay it off gradually over the course of a year? That's a better use of time and money?
So this is where the conundrum comes in, right? So
because again, there's also that psychological safety aspect.
you already see where I'm going with this. So if you want to deny the credit card company and minimize their return off of your money as low as possible, in an idealistic perfect world, you would do a balance transfer, pay the absolute minimum every single month for the entire promotional period, and then literally a couple days before the promotional period is going to end, you just make a giant lump sum payment and pay off the entire thing.
But I'm going to interject. I got to argue about this, man. So what do I care? Why do I care about the credit card company? Why wouldn't I do what's best for me, which is getting rid of my debt?
That's a great question. And that's
right, because
that
that $500 is already gone, right? Like once you've paid for that balance transfer, that 500, you have no connection to it. So
clarification, it's not gone. You don't pay the 500 up front. It gets added to your balance transfer balance.
Oh, okay.
Yep. So if you transfer 10,000, you now owe $10,500 to the credit card company.
I did not realize
you don't
that.
Pay, yeah,
right.
I'm glad you brought that up because that's an important clarification. So obviously, if you pay that off really, really fast.
That's interesting. But that can also be really good for someone who doesn't have the $500 to make that balance transfer initially, right? So it's something that you could certainly take advantage of in order to get out of a bind if you're struggling with your income.
Right. Yeah. They're, again, double-edged sword here, right? There's pros and cons. And so, in this ideal world, you would pay the minimum amount every month because, why spend the extra $500 and pay it off really early when you could just save the rest of the money in a high yield savings account in the meantime while that's earning interest, right? The risk here, and you alluded to it earlier, is that you make that minimum payment and you punt it off to the very, very, very end. You better hope you have that lump sum of money waiting at the end to pay off that balance transfer, because if you don't, that interest rate's going to go right back to the regular APR for whatever credit card you transferred it to, which is probably going to be 20+%.
Isn't there kind of like a deadly financial trap in a lot of these where if you haven't paid it off by the end of that term, they actually backdate all of the interest?
Some credit cards used to do that.
Okay.
I don't know if they still do. I'm sure there are probably some that still do that. That
I feel like that should be illegal, to be honest.
I know. I'm actually really glad you brought that up. When I have done a balance transfer in the past, I did specifically ask the rep on the phone. I said, hey, if I don't pay off this entire thing by the end of the promo period and it kicks back to the original interest rate, is that interest rate going to be applied to whatever balance is remaining, or is it going to be applied to the entire balance transfer I originally made? And they said it's only going to be on the remaining balance. But that was for my credit card. I don't know what credit cards our listeners
you would honestly
have,
have to get that in writing. To be safe, you would need that in writing anyway.
I suppose. But not only that, but it also can turn into a cycle, right? So people can get, you mentioned this trap. There's another trap, and that is some people will do a balance transfer, will delay. They won't have enough money to pay it off by the end of the promo period, so they just transfer it to another balance transfer, and they keep paying these 5% fees over and over and over again. Doesn't seem like a lot, but it actually is. I mean, it is a wealth destroyer, and it's compounding your debt repayment plan. You're not getting out of debt if you fall into that trap.
Okay, but
so that's something to be aware of.
If you really want to be kind of brutal about it, all unpaid credit cards are wealth destroyers, regardless of whether it's an upfront payment where you're doing a 0% balance transfer or a standard high interest rate credit card. If you're carrying balances over, you are heavily damaging your ability to become financially healthy and to build your financial future, right? Credit cards, if you're not responsible, destroy your finances.
Yeah, I agree. And I mean, I won't go. I'll just tell it quickly too. I have been here with a balance transfer before. I was switching careers. I didn't always work in financial planning. My wife and I got married in late 2014. We did a 2.5-month honeymoon where we backpacked.
Coming up on 10 years. That's awesome.
Yeah. We went backpacking through Nepal, Thailand, and Vietnam, and we had no money, hardly any savings. I think like when we got back from our honeymoon, we had moved to Virginia. And maybe like $5,000 in the bank. Neither of us had a job. And I did a balance transfer. And for this balance transfer, the credit card company actually allowed me to send the money direct deposit to my bank account. So I didn't have to transfer another debt balance to it. They just sent me the money as like cash, and it just became this balance transfer promotional APR for I think like 12 months or something, 0%. And I took that money out. I want to say it was like $12,000 because I wanted to enroll at Georgetown University to do like their post-bachelor. It was like a certificate program in financial planning. It was required courses for the CFP curriculum. And that was in early 2015. I had no job, hardly any money. I took out this $12,000 in balance transfer credit card debt and made the minimum payment as I was going through this program. The program took me like, I don't know, 9-12 months.
Also, everybody, this is highly risky. We are not advising credit card withdrawals in order to gain education.
I wouldn't advise it on anybody. But I mean, I want to be transparent and honest with our listeners, right? Like I've learned from my own personal experiences. And I was desperate. I hated the career I was working in. I fell in love with financial planning, and I desperately wanted to be a CFP practitioner. So I said, screw it, I'm doing this, and I took the risk. It did pay off. I did well for myself, but I didn't pay off the whole balance transfer by the end of the promotion. And I realized that I hadn't been keeping enough money building up to pay it off. So I had to do another balance transfer. And then I quickly paid that next balance transfer off really, really fast. And that's how I learned all of these things about like, here I just went through that cycle. I paid these 2 upfront fees. And then on my second balance transfer, I gave the credit card company a heck of a return on their investment because I turned around and paid it off really fast. This is coming from real experience. Yep. So I've been there. So anyway, switching gears, I think we hammered that down.
Yeah, I think so.
Both the interest rate and the balance transfers.
We can move on to those points and rewards you mentioned before.
Yeah. So this is what really draws people into credit cards. And to our listeners, please take this to heart. I promise you, credit card companies know more about your personal spending habits and behaviors than you do yourself. I promise you they do. They have immense amounts of research and AI and financial wherewithal to know your spending habits and behaviors. There is a reason they designed these. Credit cards are products. They are products. And they aren't giving out points and rewards because they're nice and they love you.
Does your credit card's like, yep, we know that Chris is going to get ice cream every third Friday.
Yeah.
I don't even know if you eat ice cream, but
Yeah. I'm lactose intolerant, so no, I don't. But they do know your spending habits, and they do know that points and rewards are a form of gamification of spending.
Absolutely.
Right? Like people feel really good when they get points and rewards, but I guarantee you, and I don't use that word often, but I guarantee you points and rewards on the whole do cause people to overspend dramatically.
Yep. And
the psychological effect of you spending more than outweighs the cost of the company having to pay out points or rewards.
Yep. And
is an absolute fact.
Points and rewards only have any benefit whatsoever if you are not carrying a balance, because the interest you pay to a credit card company will vastly outpace any reward you'll ever see.
Oh God. Yeah. 1 month of interest paid on your credit card will negate perhaps a year or more of points and rewards, depending on the balance. It could be massive. And this is a real phenomenon, right? And I've met so many people. This is a personal story. I remember being in a restaurant. We were with a group of friends, and I had one friend who insisted very enthusiastically to like cover the bill because they said something like, I don't know, I want to get more points. I get more points that way. I was like, well, we can pay you back. What's your event? No, I got it. I want to get the points. I was like, oh my gosh, you don't realize that you spending the money is far more than what the points are going to be given to you. And ask yourself with these points, right? How much are you actually earning with these points, right? So common credit card you'll see is like 2% cash back. That's a really common
Sure.
card.
Yep.
That's also competitive, right? I don't know if you've heard of more competitive than that for regular spending, Danny, but
one of our cards is a Discover, and I think it's a base 2% cash back or something like that.
Yeah. I mean, like, what's considered an attractive amount of rewards, right? Because you feel like it's free money, right? Let's say $1,000. Like, that would feel good to get $1,000
Sure.
reward check from a credit card. Well, if it's a 2% rewards card, you would have to spend $50,000 just to get $1,000 in rewards.
That's a lot of spending.
Yeah. And also, you can't use your credit card on everything. Most people can't use it on like their rent or their mortgage.
I wish I would if I could. I'd absolutely be running that through.
Right. So like you have to ask yourself, like, do your discretionary or credit card eligible expenses, do they really total 50,000? Do they need to total 50,000? Like, do you need to spend that much money? I mean, even if you doubled the rewards to 4%, you still have to spend $25K. Like $25,000 is a lot just to get $1,000 in rewards. So it seems like a lot of work and effort to get these rewards and a lot of spending required. And you have to ask yourself honestly, like, are you actually net benefiting from these rewards, or are they just causing you to actually
Absolutely.
spend?
Let's say that you have that 4% card, right? And you are paying it off every month, and you spend $25,000 on it because you use it for all living expenses except for your rent or mortgage, right? So you are spending $25,000. So you earn $1,000 in rewards every year. But that's a 4% return if you make every payment perfectly on time. But that's a lot of risk for a 4% return, right? Because one wrong step and you've negated the entire reward.
Yeah, and it's actually only a true 4% reward, assuming that you 100% truly did not overspend in any metric.
That's true.
You precisely spent exactly what you needed to spend. There was not even a single dollar of unnecessary purchases that you otherwise wouldn't have spent if you weren't enticed by these rewards or spending behaviors, because any unnecessary spending actually eats into that 4% return, if you will. And I would argue people are not actually getting a return. I think vast majority of people are not actually seeing rewards. I think the overspending behavior element is more than making up for that. Credit card companies know that.
That's fair.
Right? So,
yep.
So now I think we've talked about a lot here. Let's talk about some key takeaways. What are some ideas here? So, Danny, I'm not sure if you agree with me on this. I'm personally not asking anybody to cut up their credit cards and throw them away. Right?
Yeah, I don't. I think that both of us are comfortable with people and ourselves having credit cards. Like you mentioned before, they are far safer. You're using someone else's money up front. I never swipe my debit card anywhere. Because I have had money stolen directly out of my account in the past, and it's really tough. It's difficult, and it hurts, right? And it takes forever to get back. With a credit card, they have insurance for these. You let them know, hey, this was not an authorized purchase. They cancel your card right there, immediately ship you, like same day, ship you a new one, right? And they fix it. It's not the same with a debit card. So I do like having credit cards for that security purpose.
Sure.
The cash back is kind of just a bonus, and it's only a bonus simply because we do pay the cards off every month.
Right.
So yeah,
yeah.
We're not saying not to have cards, but you can't have credit cards if you don't have the self-control.
I feel like I'm hammering this down again. You said it's only a bonus if you pay off your balances each month. I think it's more than that. It's only a bonus if it does not psychologically cause you to overspend to begin with.
Okay. That
in addition to paying off because it's not just the credit card interest that you would pay if you don't pay off your balance that eats into that bonus. Mm-hmm. It's the literal overspending beyond your means that eats into that bonus.
Okay, that's a fair argument, and it's been proven that it is easier for people to spend on credit cards than paying with cash.
Right.
Yeah.
Yeah. I think a big key takeaway. I agree with you, Danny, on the pros. Use them responsibly. I think one of the exercises here is to build more self-awareness around them, right? credit card companies know what they're doing. And none of us are exceptions to the rule, right? We may think we're not psychologically spending more. We think we are the exception to the rule. We're all guilty of this, but we're not. A fun example I always like to talk about is buying cars. I have yet to meet anybody who has bought a car and then came to me and said, "Yeah, I paid, just a standard price." I think every person I've ever met who's talked about buying a car, I've always heard, "I got an amazing deal." Like, "Oh my gosh, I got a really good deal on this car."
All right, can I be the one to break that trend?
Do it.
I paid the standard price.
Oh, yes.
I did not get a deal on the car. You know what? Let's be totally transparent. I bought a WRX, right? Not the cheapest car, not the most economical. It's fun. We live somewhere we live in the high desert, right? We get just crazy amounts of ice throughout the year. And so it's a pretty powerful vehicle for its size and price. It's all-wheel drive, and it's symmetrical all-wheel drive, which is what I wanted. And during the winter, we put on wheels that have studs, and we have not been disappointed. We love the vehicle, and we paid standard price. Bought the base model because the only thing we care about is the all-wheel drive, the engine, and the drivetrain. So base model, paid standard price, put a little less than 50% down, and paid the rest off. So we did pay standard price. We did not get a good deal, just standard, but we're not disappointed with the purchase.
I love your bravery and just being upfront about that, because everybody pays standard price. Like that's the truth behind it, is that the dealers are selling you the car exactly for what they want you to buy it for.
One caveat there: people did not pay standard price during what was it, the 2020-2021 used auto apocalypse, when everyone's paying like 175% over MSRP. Yeah, ridiculous. Yes. Again, I said my vehicle is worth as much now as when I bought it.
I don't like to talk about that time because my wife and I bought a Toyota 4Runner, which is our dream vehicle.
All right,
we do a lot of adventuring.
Nice vehicle.
And at one point, with 15,000 miles on it used, we could have sold it for almost 30% more than what we bought it new.
That's ridiculous.
And I actually got upset, right? You would think I'd be jumping for joy, right? But that was such an odd time that it's like up is down, left is right, and everything I ever studied about financial planning is completely turned on top, upside down.
Degree? What's the use of this degree?
Yeah, cars are supposed to be depreciating assets. They're not supposed to be the top performing asset. So anyway, that we're not going to talk about those dark times. Getting back to the topic of credit cards, the point of this car example was it's a good analogy, right? Because everybody thinks they got an amazing deal on their car. I always laugh about it because it's like, I'm surprised that the auto industry is not out of business and shops aren't closing down. Everyone's just buying cars left and right for way below asking price and just getting killer deals. How in the world do these auto companies stay in business? I just don't know. So the point is, the credit card companies know what they're doing. The auto industry knows what they're doing. There is very much a psychological play happening here in this space. So be mindful of that. Be aware of that. It is a phenomenon and it affects all of us. Everybody is susceptible to it. So what are some things you can do to maybe mitigate this psychological risk, if you will, that creeps up on us, right? Sometimes we're not even aware of it. Well, first idea, Danny, I think you might have already, by example, explained this, but just sticking with one or two credit cards, just a couple, rather than opening a ton of credit cards and trying to chase all these different points. I don't know how many credit cards you have, but
two.
Yep,
and we have two. I've raised the credit line on each, just so that we try to keep the utilization on each card below 10%.
Yeah.
And then all of our essential expenses go onto it except for the mortgage.
Yeah, that's awesome. Yeah, I think for some people that could be a good method, is just limiting the amount of credit cards you have so that you don't fall into this trap of wanting to chase more credit cards for these juicy looking points and benefits.
Yeah, I don't even care about the points, truly. And honestly, all the points just go towards paying off the balance every month. That's all we use them for. So
that's fair. Yeah, I think another idea, and you also just mentioned it a second ago, is only using credit cards for known, predictable, essential expenses, right? And I'll give you an example from my personal story. Um, my wife and I shop at Costco. So we'll buy some of our staple food items in bulk just to save money.
Absolutely.
And
we buy those
we'll
60
freeze a lot
pack
of
of
stuff.
eggs all the time.
Yeah, yeah. And we do have the Costco credit card, and it has 4% back on gas purchases. It's not perfect. I don't think it works at every gas station.
Okay.
But gas is not something that I go and spend more on without realizing, because it's kind of like a staple expense. You drive places, you end up having to fill up your tank. So that's like a stable expense that I know isn't being influenced by psychological factors. Not saying people should go get a Costco credit card, especially if you don't shop at Costco very often, but I'm just giving a personal example. Some of our listeners, you might have cards that look at your credit cards if you have them and ask yourself, like, is there anything here where I could just dedicate it to just fixed known essential expenses?
Absolutely.
I did something nerdy. This is a shocker, right? Surprise to you, Danny, that I would do something nerdy.
You never.
Yeah, I actually I printed out on a piece of paper, really small font, and I cut out neat little squares, and I neatly taped them on top of my credit cards and my wife's credit cards. And on these white pieces of paper, it lists precisely what we should only use this credit card for. So
okay, that is pretty nerdy.
Yeah, I mean, I did it because that way, if I'm gonna purchase something, and I think I'm like being influenced by rewards, I can look at the credit card and be like, oh, well, this isn't serving me. Like, this isn't this. It's just trying to put more intention behind it.
Sure.
So I don't know. I might get a little bit judged for that one. It is pretty nerdy and over the top. But I mean, hey, if anyone's inspired by it, feel free to adopt that wacky method. And then idea 3 is just ask yourself some questions before you make any discretionary purchase. Like, for example, ask yourself this, like, I'm thinking of buying this thing. Do I actually need this purchase? Or am I just seeking some type of short-term comfort or distraction?
Definitely. One thing that I try to do is any kind of impactful purchase, anything that's discretionary and starting to exceed a certain dollar amount, I sit on it for days and days and days, and I think about it. Right? And do I, like you said, am I just bored? Am I looking for some quick satisfaction? Or long term, is this something I truly need? Is it going to make me happy? I'm going to use it a lot. Right. You know what? A great example. I need a new laptop. I have a work laptop, but I need a personal laptop. And I've been doing research and sitting on that purchase for, honestly, months. I'm honestly delaying at this point, but I'm going to make the purchase finally this week. I'm going to get that done.
Nice.
But my example, I've been waiting too long. Think about it. Think about it for a couple days or a week, right? Do you need this?
Yeah, I mean, is the thing you're about to buy actually going to provide you with long-lasting, profound quality of life improvements, or is it just, a frivolous, short-term thinking purchase? And going back to Danny, we talked about this in the I think it was episode 2, thinking of yourself as the you business, right? The concept of the future self. Think about your future self. Is your future self going to regret that you had purchased the thing you're thinking of buying?
Yeah.
Is your future self going to wish you had saved it instead?
If you've dwelt on it beforehand, it's very unlikely that you will have buyer's remorse.
Yeah. Yeah. And I know you said you've been delaying and you felt like you were delaying it for too long with the laptop purchase, but these questions, you can ask these in your head in just a moment before you make a purchase. And that itself may be enough to put enough intention behind the purchase that you might say, you know what, either I need this or I want it, or you know what, I'm actually going to walk away from it. I don't need it. So just do that exercise. I think it's going to help with self-awareness. Credit cards, just to wrap up, Danny, I think we both agree on this. Credit cards themselves are not inherently bad, right? But the system developed around them is not necessarily in our favor.
Yes. You can use them responsibly, but the system is built to take advantage of the average consumer. 100%, because that's where the money is made for the companies. So they are not inherently bad if you are using them very responsibly, but the system is built to put you at a disadvantage. So keep that in mind.
Yep. Just be aware of that. Keep it in mind. And Danny, I think we can both reaffirm our commitment. Let's and listeners, hopefully you'll join with us on this endeavor. Let's commit to never paying double-digit interest on our credit cards again.
I agree. I don't want to do that ever again. Chris, thanks so much for talking through this with me. As always, it's great to discuss this stuff. And for everyone listening, we hope you took a lot from it. And as always, have a great week.
Take care, everyone. See you next time.